Hi, this is Peter with Quantum Edge AI, and this is the Strangle strategy, another one of my favorites. The reason for this is, as we may know, most options expire worthless. And even if it is in the money, your credit typically nets more of a premium than the loss of the differential. So that's why this strategy is really fantastic, is because you have a wider range of threshold of profitability, and you also can specify where you want these contracts to be. So let's go into the option train and deconstruct it. Now, you can do one of two things. You can say analyze by and in TOS, and you can pick Strangle, or you can say, okay, well, you can pick them individually. We're going to pick the front week, the closest weekly option expiration, and we can specify, okay, where the high forecast is, where the low forecast is, and we can place that where we like. So say 111, we think price is not going to breach the high forecast. Say, for example, we're going to hit it at the low forecast. We don't want, it's not going to breach the low forecast. So we set this trade up and we say, okay, well, our net credit is going to be $134. You add up these two numbers, and that's our net credit. For this position, in this case, you're going to be slightly delta short. Now, this isn't advice in regards to how to trade this position. This is simply education for how you can set up the strangle given any ticker within Quantum AGI's forecast. So this is one strategy you can use to benefit from theta decay. What every option trader should be entirely aware of is theta decay. That the majority of your portfolio should be net credits, where you are generating this decay and doing so in a systematic fashion. That's why we created Quantum Edge AI, is to create a systematic view of a time series of each individual symbol, such that you can always get involved in a position, whether or not you miss this upward movement, you miss this downward movement. You know what? There's always an opportunity in each one of the markets. You just need to know how to construct these trades. So back to the strangle. So what's fantastic about this is that the threshold is from this point all the way to this point. This is your Goldilocks zone where you are profitable. Now you could be thinking, okay, well, price is down here. If price moves here, okay, my delta is going to be, I mean, your P&L is going to be somewhat negative. Uh, but guess what? The potential for it mean reverting or reverting back to the closed forecast is high, and vice versa for the high forecast. And so you want to use Quantum Edge AI as a guide in order to structure your trades within. Um, so the strangle strategy, you're selling one call out of the money, you're selling one put out of the money, and what you want is to structure it in such a way that you that these locations, 111 and 102, are highly unlikely to surpass. But you want to do so as close as you can, because you don't want to be selling, way out here, further out, let's say like the 115 and the 97, let's say, where your net credit is only $38. You want to be maximizing this position, maximizing the credit, and justifying the uh, the overall commission of the trade. So you can also construct this within. You can construct it this way, or you can construct it by going sell, analyze, sell, strangle, and then adjusting them like this. This is a better way, a faster way of doing it. The 111 and say the 102. And you can also set this up where confirm and send. You can also do a first trigger as OCO, and then you can duplicate this position and buy. That would be your exit. And because your first trade is a um, net credit, your profit potential is lower. So this would be a $33 profit if you were to place it at $1. But I would recommend holding this at least to be more of a systematic trader in the sense that you're not set. You can be setting a profit target, or you can say, okay, well, I've um, I've set up this trade where 111, 104, and I've set up this trade. You're in the trade, and you can say, well, I'm going to close the position on Thursday at 3:45 p.m. Eastern. Or I'm going to set it up for 50% profit target. I'm going to make 60 and change, and I'm going to close this position. So those are two ways you can set up. You can be time based, you can be profit based, or you can be both. You can say, okay, well, if it doesn't reach that 50% profit target, then I close the position. So that is the Strangle strategy, and you can do so using TOS. You can also construct it individually, and you can construct it further out too. So say, for example, we have this back week. Now we have the back week movement too, where we're saying the week 2, and we're looking out for next week. This is now 10 days. So it believes this is going to be the high and low forecast given 10 days out. And we constructed this and say, okay, well, we want to put these a little further out, say 112 and 100, let's say. But we also want to put this out another week. Your theta decay is going to be slightly lower because it's not the front week, but your total risk is going to be, well, there was a trade-off with the going a little further out. It's going to be less because you went further out too. So your credit is going to be somewhat larger, and you are technically less risk. This position is less risky because you went a little bit further out, and is less risky because the credit is larger. So I recommend, this isn't investment advice, but in what I would do in my position, in my eyes, would be to look at that second week, generate this a larger credit. You have you have less gamma risk for surprise movements up and down, and you have this more consistent theta that relative to your risk reward. Okay, that will do it. If you have any questions, feel free to email me at peter@quantumedge-ai.com. Comment, like, share. I greatly appreciate it. Thank you.